even if you take a look, let's say the general indices only go up another 5% into year end, 5, 6, 7%. Maybe they'll go up more and surprise us. There are going to be stocks under the surface that are going to be up 30, 40, 50% that haven't participated. Because if you remember, up till 4 weeks ago, the rally was driven by Magnificent Seven. Basically, 7 stocks drove most of the rally. It's starting to broaden out now. So you could see a subdued S&P index. So I wouldn't be like chasing the indices. Look for those things that were part of the 93% that had 0% returns year to date and opportunities moving forward. You're seeing the dollar weaken. Look at multinationals. They're going to benefit from a weak dollar from those foreign earnings. 2 stocks that are down 80% off their 2021 peaks.
Okay.
And the first one is about as boring gets.
I know what it is. Tell the people.
This is the Kleenex of home standby generators. It's called Generac.
Riveting.
And, Generac has a 75% share in this business. The problem is during COVID, they built up their inventories too much because they couldn't get parts. And it looks like in Q1 was the trough. So they're working through those inventories. They were at 1.7 times normal inventories. They got down to 1.4 times. They think they're going to be normalized by early in the second half. They're going to be cash flow positive this year. And the thing about this company, first and foremost, because of the pessimism, they're trading at about 15 times. Their historic average multiple is about 30 times, so you're getting a huge discount in terms of the growth. And the runway ahead is monstrous. They only have 6% penetration. And you could say, well, does it get saturated at some point? People don't buy 2 generators for their house.
Right.
What they find is in the top states where they have the most penetration above 10%, they consistently have the biggest growth rates, because what happens is everyone has a generator, so everyone wants a generator. Whereas in the markets where they're underpenetrated, they say, well, none of my friends have a generator, so what do I need a generator for? This is going to continue. This company it could be, over the next 12 to 24 months, we think, a double after being down 80%.
And that's because of it being down 80%. So is this also just like a summer play because of, I don't know, potential for just demand and power outages, et cetera? Is that what is part of this?
I'm going to bring you in as an analyst at our fund, because you hit the nail on the head. This company does well on the basis of weather events, and we just entered hurricane season from June through September. You get the power outages, and by the way, our grid has been underinvested for so many years that what you're seeing is, when I was growing up, power outage was an hour, 30 minutes. Now, in some cases, they're 3 days, 4 days, 5 days.
In Texas,
And when that happens, even in Connecticut, it's crazy. When that happens, everyone goes out and buys a generator. So we're expecting above average weather events for the next 4 months. And if that's the case, that's going to be a further tailwind for Generac. We're going to see some acceleration. With rates lower, we're going to see the housing market start to come back, home building come back. That helps Generac as well. So there's a lot of pent-up demand with all the millennials, the young folks like you, 33, housing and family formation. You all are buying houses now that rates moderate. You're going to jump on that. You're going to want a generator, and that's what's going to come.
He's the millennial.
You find me a bank that's going to give me a loan, we can talk. I also got to talk about PayPal, though. You talk about millennials. Of course, this is like the Venmo season, if you will. Summertime, you're out with your friends. You pay for this pizza. I'll hit you back with that money later on. Let's talk about PayPal here, because that's one of your other picks on the day.
Yeah, this is probably one of the most hated stocks right now. Again, down 80%. Look, they've got 435 million users around the world. That's mind-boggling. 3 billion transactions. So why is everyone all up in arms? Number one, obviously they got ahead of themselves during COVID. The valuations were crazy. Right now, it's trading at 11 times forward earnings compared to its average historic multiple of 33 times. This thing is a monster. So what happened is they did this acquisition called Braintree. And Braintree really ramped up the volume, but their margins are lower because you don't have as much juice as you have on the normal PayPal transactions. So analysts got worried that you were having margin contraction, but you were having... It's okay to have margin contraction as long as the bottom line keeps going up. And what they wanted it to go up at a certain percentage all the time. I'll take tons of extra volume as long as the bottom line goes up. And that's going to continue to happen. You have 2 other things. Dan Schulman is stepping down before the end of the year. So you have leadership uncertainty that will get resolved. They'll have someone good. And then you've got an activist also to catalyze with Elliott in the stock, Elliott Management. So they are good at extracting value. So I think there are a lot of things that can go right while everyone's looking at what can go wrong.
They are, unless, for lack of a better way of expressing it, the what could go wrong plays that you have, the ones that that I guess you're not a fan of. Let's start with Oracle, which surprised me. You're going against the grain here.
Yeah.
I mean, it's up on the day, continuing to extend its advance. Explain your thinking here.
Okay, so Oracle and Lilly, I mean, you know, I never, we're not short these stocks, so let's be clear about that. I don't think this is the time to be short aggressively anything. However, we like things that are on sale. We don't like things that are marked up. And we think that after Oracle's earnings, they're now trading about 4 turns above their average historic multiple. They usually trade at 18, they're trading 22. And we just say, okay, let this thing breathe. It's a great quality business. We get that their cloud is growing, but see if there's a pullback before you get interested. You don't need to chase it up here after earnings is our view.
Yeah, and then Lilly as well, one of the other picks here, Eli Lilly. Similar multiple issue that you're taking?
Yeah, it's certainly a multiple issue. It's trading at 51 times, I think, relative to its average of 25 times. And it's on the hype around Mounjaro. So
that's what I was going to say. It has, I'm sorry to jump in. It has Mounjaro. Like, how would you go against this? I mean, these weight loss drugs are all the craze right now.
Yeah, there's no question. But obviously, they have competition from Ozempic and Wegovy. And the stock has moved up dramatically in anticipation of the approval for weight loss usage. Right now, it's being written off label, but they want to get the weight loss usage. So 2 things can happen. Number 1, you could get that approval and it's to sell the news because it's run up so much. Or number 2, God forbid, which I think is very low probability, what if you didn't get that approval and it's already priced that in? So I think, you know, again, I think the long-term runway is certainly good, Diane. I agree with you, but I don't want to pay up 2 times its average multiple. So for me, they're just a pass for now. It's not they're not great. They're both great businesses, but they're a little rich for me right now.